Okay, good evening, everybody. Let's go ahead and get started. Just want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little wire yes there. Just let me know that it is working. Just want to also welcome everybody, all those watching live and all those watching this in the recording. Want to say hello to you guys and just also want to give a shout out to those of you on YouTube. Want to say hello to you guys as well. But yeah, let's go ahead and jump into this. So we're going to talk about the COT report tonight. A couple of things I wanted to talk about specifically. So tonight, I wanted to cover just general basics about the COT report, but then I want to show you the best way I know how to pick trades with the COT report. So we've done really well recently with picking like swing trades and price action trades from the COT report. And our selection with which pairs to trade has been outstanding. And I want to show you guys exactly how I figure this out and how, so we basically built the scanner to detect these changes um, like before they even happen. So you can basically see what the COT report and the banks are doing, and then you can ultimately decide, based off of what the chart's done so far in the last week or so, if you want to invest as well. So I'm going to show you the best way I know how to do that. And that's what I'd really like to cover tonight. This shouldn't take us too long. I think to basically illustrate the point I want to make, it should take us about 20 to 30 minutes. If we need more time, we might go a little over, but that's kind of how long I think the webinar will last tonight. But let's go ahead and jump into it. So as always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So first of all, let's talk about generally what the COT report is. So the COT report comes from the CFTC right here. So this is a financial regulatory authority here in the United States, and basically what they do is they give us data on what the banks are doing, what they're buying and selling. Specifically, the CFTC monitors the commodities and futures. They also cover Forex, and they make sure that things operate correctly. This is the regulatory firm that a lot of brokers have to go through in the United States, like Forex.com, Awanda, TD Ameritrade, Interactive Brokers. You can trade Forex as well, and they have to be regulated through the CFTC. So, one of the things that they do is they give us this lovely COT report right here, and it's amazing that it's free. Anybody around the world can come in here and get access to it. But like I said, I'm going to go through this just general. I'm not going to do anything too intensive on it because a lot of you know what this is. And if not, I can send you some more very basic webinars on the COT report. But basically, it stands for Commitment of Traders, and it tells us what the banks have been buying and selling on a week-to-week basis. And we use it to determine which direction the banks are going. Are they generally buying or are they generally selling? Okay, so there's lots of different types of COT reports. There's COT reports for agriculture, petroleum, electricity, metals. There's a financial report. There's also these legacy reports that have to do with different exchanges. The one that's most common is this one from the CME. It's the short format CME, and this is basically a COT report right here. And you can zoom into it. I do a Control Plus to zoom in, and then I can do a Control F to search for what I want specifically. So if I want to look at the British pound, I'm just going to search GBP because that's the abbreviation for the British pound. And this is it right here. So I'm just going to basically, like this is the data. It's pretty boring, but it's gold. In my opinion, this is worth its weight in gold. Basically, they tell you, okay, over the last, okay, so these are the banks right here. This is the long and short positions. This is how many contracts they have long. This is how many contracts they have short. This is the change from the previous week. So they decrease their long positions and they increase their shorts from the previous week. Okay. So that's the general gist of it, right? And so we come in here, we non-commercial is speculative banks. Commercial is more like hedge funds and multinational corporations that trade for operating their business, but not for the purpose of creating income through trading. It's more just to run the business. So non-commercial is who we follow generally. So when these guys shift over like a 3 week period or a 5 week period, we want to pay attention to it because these guys are pretty dang good at trading. And when they go in a specific direction, we got to start looking for trades in that direction as well. Okay. And that's what we really want to focus on tonight. So I'm not going to go into all the details of this. I've been using COT reports for, oh my gosh, like 10 or 8 years now. I think I'm on like 8 or 10 years of using COT reports. So I've been using this for a while. This has been around for a long time, even longer than I've been using it. So you can actually look up COT reports that are archived that go all the way back to '05. There are COT reports that go even before that, but they're not, you have to dig deeper. I think you might have to go someplace else to get them outside of the CFTC. But the CFTC has COT data all the way back to '05. So nearly 20 years you can go back and look at, which is pretty cool. All right, so we built a scanner, obviously. So the scanner's right here, and this scanner is what we use to uh, provide signals. So the scanner itself will issue signals based off of several different derivatives of the data itself. Okay, so the data will tell you a lot of things. Number one, it'll tell you, okay, these are what the banks are buying. This is what the banks are buying and selling. Period. Here's their footprint. And that's really what the long-term data is for. Like the long-term signal here will tell you what to buy and sell based off of, what their footprint is. And then we have things that are a little bit more advanced, like what is their shift? Okay. Are they shifting positive or are they shifting negative? Right. And we have other advanced things like the crowded market indicator, which we also look at to determine which currency pairs are on the verge of being overbought and oversold. Okay. Then there's other things in the scanner too that don't have to do with the COT report, like the sentiment index right here. This is basically retail traders and what retail traders are buying and selling. And then you have their subsequent long and short positions right here. So this little part right here on the scanner is different. This has more to do with sentiment, and sentiment's a whole nother concept. So we're not going to dive into that one tonight. Mainly, I just want to focus on the COT report. Okay. So, and I want to get to the part where I tell you the best thing I know how to do as far as picking trades. Okay. So how do I use this scanner? Right. So before I get to that, I just want to show you this. So there's lots of different derivatives here. I want to make sure everyone knows how this works. So like you have over here on the left side the currency pairs. There's 28 currency pairs, forex currency pairs, and then there's 5 CFDs. Okay, so there's a total of 33 different things you could possibly trade on the scanner. Then the next column is your overall buy and sell signal. This is probably the most comprehensive signal in the scanner itself because the overall signal is a is takes all the information that we have from sentiment, the crowded market, the 5 week shift, the 3 week shift, the long-term data. It looks at all of the elements of that currency pair and gives it a score. And if it reaches a certain threshold, then we issue an overall strong buy, strong sell, sell, buy, or neutral signal. Okay. So this is probably the most comprehensive thing. We use this to take overall weekly signals. Okay. So these are trades that you're going to take at the beginning of the week and then hold them until the end of the week. Okay. That's the general idea. I also have several videos I can send you guys if you need help on taking the weekly trades. I actually want to put a video down here on because I have a video on the scanner, but I wanted to put a video down here specifically for taking the weekly trades. So maybe we'll get that added soon. So that's the overall signal, and we use that for the weekly trades. Now, you can use the scanner not only for weekly trades, you can also use the scanner to take price action trades, which we often do in the mornings. And how do you find really good price action trades? Now, first of all, before we jump into that, you got to know the context of the caught data. So a lot of people come with their own preconceptions in mind of how to use the scanner, when really we need to align our way of trading with how the scanner is providing the signal, because the scanner can say like, oh, this is a strong buy, but it doesn't necessarily mean it's a strong buy for the next little bit, like the next hour, the next couple of hours, or even the day. The scanner is providing overall signals that the banks are buying and selling. So, in my opinion, this scanner is probably the best scanner. I've never seen one better. I mean, I'd love to find a better one if you guys know of one better. But as far as picking the direction that the banks are buying and selling over a multi-week long period, this is probably the best thing I've ever seen. And that's why I love it. And that's why I trade like this, right? I look for swing trades because this is the ultimate swing trading scanner. So if you try to use this to scalp, I mean, you can, but I wouldn't say it's designed for that. So if your expectation is to get scalp trades out of this, you're probably not going to make a lot of money with it. So just want to make sure that that's clear. And I wanted to share that with you as well. Okay. So what do I do? So with that in mind, now that we've covered that and we know what it's used for, like how do we get signals from this? So obviously I showed you guys the weekly signals. We could follow these on a week to week basis. But if I'm trying to find like a price action trade, some kind of trade that I can, really get behind over the next week or two, that's going to pay me out big. I go and look at the 5 and 3 week shifts. Specifically, I'll probably spend more time on the 3 week shift, which is why I'm super glad we got the 3 week shift added to the scanner. Why do I like, you guys probably know, some of you could probably tell me this because I've said it so many times, but why do I like the 3 week shift so much? I like it because you're still early on enough with the market and the banks that if you catch the banks buying into something on the 3 week shift and the market hasn't moved yet, so then that provides a huge opportunity. So that might kind of sound weird. You might be like, wait a second, if the bank's bought but the market hasn't moved yet, doesn't that mean it should move? Well, that's the point. It should move. So if sometimes the banks start accumulating, these are US banks that give us caught data. So if these US banks start buying into something and the Forex market has not responded to those US banks, then there's an underlying opportunity. So that's what we're after is a divergence in what the price is doing and what the banks are doing. So this is like our secret weapon. Like this is what it just works. Okay. Um, and if you can find currency pairs that have this phenomenon, then you're gonna have some stinking awesome opportunities. One of the ones that we've been watching right now, we talked about this a little bit at the end of the last webinar, is US 30. So if you look here on US 30, it's a strong buy signal right now. Why is it a strong buy signal overall? Well, there's several reasons. If you look at the 5 week shift, it's really positive. It had a 45.532 shift over the last 5 weeks. The 3 week shift, you can see right here, has a 25.05 positive shift. There's a general bias to buy on the long-term footprint. And then retail is generally short right now. So that's going to give us a buy signal as well. So all of this is screaming buy on US 30. And if you look at US 30, though, over the last several weeks, what has US 30 been doing?
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
It's actually been down. Well, this last week or two, it's actually starting to come up again. We're actually starting to get those bullish moves, which is kind of nice. But before that, what was happening over here? Like we had a big move to the downside. Meanwhile, the banks were actually loading up. So throughout this area over here, as this was coming down, the banks weren't really fooled. They actually started buying onto US 30, right? So this is one where I look at and I think, okay, the price has actually gone against the banks, yet the banks are clearly buying. So that's why this is why I love this, because this is information that that an indicator couldn't give you. You couldn't get this from an oscillator. There's no EMA that could tell you this information. No SMA, nothing like that. This is something that's exclusive to the COT data and the way we've put it together into plain English for each other on the scanner, which I love, love, love. So that's the best way I can find stuff is I prepare for moves in advance. I'm not exactly right every single time with my entry, but I am pretty much following the banks. And the banks, they get it right most of the time. I won't say they get it right 100% of the time because they don't. Sometimes they're actually wrong. But I will say that they're pretty dang good. And generally, the market will follow them. So if you prepare in advance, you should be able to capture some pretty big moves. So the move that I'm preparing for, what kind of move are we talking about? Like, what kind of move is this? Well, since this is so early on US 30, I imagine that US 30 will probably make a move the opposite of what you saw over here. Perhaps more, probably more. Okay, so if if uh if this went down for like 3 weeks, um, if this went down for like 3 weeks, and this was like it went from almost 40,000 down to as low of 37,200. I'm basically expecting the same move back to the upside. So this should be, like I said, this should be headed back up to 40,000, perhaps more. And we're at 38,000 right now. So it's kind of a bold statement, but I'm just responding to what the banks are doing. That's what they said they were going to do. That's what they said. So that's what I'm trying to follow, right? Okay. And there's other reasons too. Like this um like broke structure right here last week, and then we have a flag formation right here. Yeah, it's about as bullish as it comes in my opinion. And the fact that the banks are buying just gives me all the more confidence to be confident about this trade. So this is a trade that we're probably actually going to take together. I'm going to try to actually get us into this. Um, I might even just take a market order tonight. I'm thinking I might do that. So, all right. Okay. So what else? What else? Let's find some others. Let's do this. Let's just continue. Let's follow. Let's do this together. So what are some other ones? Like we talked about the euro pound, right? Euro pound had a really positive shift for the last 3 weeks, but what has the market done? Well, generally, if over the last 3 weeks, euro pound's actually been down, in general. So let's look at this. Let's pull up that weekend indicator. Okay, so the yellow that you see is a weekend. Each yellow is representative of a single weekend. So in between a yellow and a yellow is a week. This is another week right here. This is another week and so on. Okay. So over the last 3 weeks, this is generally down. You can kind of draw from 3 weeks ago to now, it's generally down. But the banks have been buying aggressively. And so that's why I've been looking for reasons to buy this. Um, with that said, though, this could certainly I'm a little bit more positive on US 30. This one I'm like sixes on. I'm like I still want to keep my trade. I think it's a good entry, but I'm a little bit like cautious with it as well. It's the US 30 that I'm like, yeah, that looks really good. That looks really, really good. But this one will be good as well. My only concern is that this one may actually come down first and then go up later, big time. That's my biggest that's my biggest concern with this one. But nonetheless, that's the idea. So that's what I'm preparing for. So I use the COT report and the scanner as like a framework of okay, this is what we're trying to prepare for. This is what we're expecting. So let's go ahead and get ready for it in advance, right? So, um, so that's what this is another one. Like I look at it and I see the market generally down or even sideways. Meanwhile, when you actually look at this data, you can see that they're extremely positive, right? So that's a good example of what I'm talking about. Let's find another one. Like look at the Aussie franc. This is also really positive, 36.13% positive shift over the last 3 weeks. But then when you go look at the chart, um, this one's actually gone up over this period of time. So over the last 3 weeks, you can see that we've clearly cleared a lot of ground. Like this is up now. It actually went down. Some of the best buys were down here a week or two ago. And that's when that's really when we should have been looking for buys is when we saw the banks buying, but this was actually going down. That would have been the best opportunity. So this one still may continue up. I actually think this Aussie franc is forming a cup and handle pattern right now. Um, Basically, this void in here is your cup, right? This is where your coffee goes, is right in there. This is your one side of the handle, and then this is the other handle right here. Like you've got a little bit of a dip right here. That's an actual handle. And then these usually break out to the upside is what usually happens. So that's kind of what I think is coming on the Aussie franc. And that would make sense because that's what the banks have been buying. But this is something that I don't get as excited about this one. I mean, because we traded this one last week and the week before. We already made a lot of money on this pair and ones like it, like the Aussie yen. We made money on the Aussie Kiwi, and this one will probably continue based off of what I'm seeing right now. But I don't get as excited about jumping into it if it's already made the move. Okay, so I've already kind of seen this bullish aggression right here. That's all banks right there. That's the banks doing exactly what they said they would do right here. That little number, well, it's a big positive number actually. That's this. Okay. That's what's happened. And so now that they've kind of done it, it could still go up, but maybe not to the extent that some other pairs will. So I always try to find discounted currency pairs, right? Try to find discounted currency pairs relative to what the banks are doing, right? So again, it's a divergence in price where price has gone one way, but the banks have gone the other. That's where the huge opportunity lies right there. So let's try to find another one. Okay. So we can continue on. The USD franc, another really positive one, right? So this has been going up. Let's see. Today it's up. Had a little bit of a pullback late after FOMC, but it's been up, right? And if you look at this over the last 3 weeks, this is the third most bought up currency pair. This is where the market was 3 weeks ago, was right here. So in 3 weeks, it's gone up. That's exactly what the banks were going to do. They said they were going to do it, and it happened. Okay. So Could it continue up? Absolutely. I'd probably expect it to, but it's not, this is not something that I go double dip in if it's already made the move. I just admire this stuff. I admire that the market's gone up when the bank said that it would. Okay. That's kind of how I look at pairs like this after it's already happened. If you guys recall last week, we placed a buy limit on this pair. This was actually the pair where we missed the entry by 1 pip. If you guys remember that. It was a great trade, but we just missed the entry by 1 single pip. It was this right here. We had a buy limit right behind that little low right there, and it just didn't quite trigger. But that was the general idea, right? Just the general idea, right? So since this market's gone up over the last 3 weeks and the bank said it would, like I said, I admire that, but it's not something I continue to trade because it's already happened. So I just move on from those ones. Like I just continue on until I find what I'm looking for. Like US 30, we looked at that one already. That one is perfect because the market's gone down. Meanwhile, um, uh, the banks have been buying. So that's the divergence. That's the whole opportunity is banks are underwater, market has gone against them. So that usually means you're pretty close to some kind of move to help the banks recover from any losses that they have. So I think sometimes as retail traders, we kind of think, and I actually used to work at a bank too, in different capacities as well. And sometimes like we think that banks are like they can't be broken because they're the bank. Oh my gosh. No, they have bad traders sometimes too. Like sometimes they take bad trades. That's what happened to Silicon Valley Bank. They took a really bad trade in 2021 to the tune of it was a multi-billion-dollar bad trade. They bought some bonds that were way overpriced, and then when rates went up, those bonds became, 75 cents on the dollar. And investors, smart guys, got wind of that, and they were like, "Oh, that's not a good sign. Let me get my money out." And then 3 days later, the bank failed. So, so just because the banks are like this is some when I talk to people on the phone, they're like, wait a second, if the banks are buying, shouldn't that mean the market goes up? It should. That's the thing. You're right in that assumption. But it's not like the market goes up right away. Sometimes it takes time. They have to accumulate the position for several weeks, sometimes several days, and then the move actually happens. And that's precisely what's happening to US 30 right now is we're finally curving to the upside finally happening, but the banks have been buying it for so long, and it's and they were wrong. They were wrong for weeks, and you could have said, well, or any one of us could have said, oh well, I guess the banks are wrong. They're not necessarily wrong. They're just in a losing position. They're going to make money on that trade. You bet your bottom dollar they're going to get that trade to make money. It's just going to take some time, right? So so that's how I view a lot of this information is I don't expect them to, I don't look at these numbers and say, "Oh man, that must mean that this pair is going to go up right now." No, sometimes it already has, sometimes it hasn't yet, and that's what we're preparing for, right? Let me see if I can find another good one. So the Euro franc, that's also been really positive over the last 3 weeks. Let's take a look at that one. Yeah, and see, this is another example. So the banks started buying this one. They started buying 3 weeks ago, which would have been this is 1, 2, 3 weeks. So they're generally positive. Like this is very similar to the Aussie franc. So so they 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 bought mostly down here. Okay. And they're obviously making money and now that this market's come up quite big time, they're not losing on probably any of they're probably profitable on every single trade they took. So this is the kind of thing where I just admire it. Could it keep going up? Yeah, in fact, likely. You could see some pullbacks, but then ultimately see this continue to the upside. Absolutely. But it's not something that I look at and think, oh man, like I better get in because the banks are buying. No, I this has already happened. Like this is where they started buying, but they collectively bought throughout this area and this area down here 2 weeks ago. and now it's all the way back up to here. So they're profitable on every single trade they took taken at this point. Maybe they bought a little bit over here and they didn't make a lot of money on these. Maybe they're slightly up on them. I bet they've already liquidated the ones from over here. Um, and if not, then that means they're probably expecting this to continue higher. But this is not one that I look at and think, oh man, I better get into this. No, not as much because it's already kind of happened. But if I had to pick a direction, I would suspect that it would continue higher, but I wouldn't necessarily say that it that this is like an opportunity that has already happened yet. Now, I don't think it's really happened yet. So let's continue. So we've looked at a lot of positive pairs. Let's look at some of the negative pairs that have opportunities. Okay. Um, so here's the pound Aussie, and this one's really negative right now. In fact, this is the biggest number as far as absolute values go. It's a very negative shift, okay, over the last 3 weeks. The banks have been selling this one pretty hard. So let's see what it's done over the last 3 weeks. Let's go pull this up. Okay, so 3 weeks puts us again. That's why I'm using these yellow. I'm using these yellow lines to help figure out the weekends. Okay, so it's a cool little indicator. It's just called, I think it's just called the weekend indicator on TradingView. Okay, so here's week one, here's week two, here's week three. So this is where they started to sell. This is where the market is right now. So it's kind of like uh, this one's kind of interesting because um it's basically like this market's basically at break even from where it was 3 weeks ago. So this is the same price where we were 3 weeks ago. It did go up. This is where the real sells would have been like huge opportunities to sell big time when this market came up here. And then obviously when it pulled back, you could have made a killing. Will this continue lower? Potentially, but since it's already had such a big move to the downside right here, I I have to look at this and realize that the banks are probably in a good spot. Okay, so I have to try to find them off guard. I have to find them upside down. So what I'd like to see, let's put it this way. Let's say that the market went up here from 3 weeks ago, 2 weeks ago, and let's say it continued up. If that were the case, I'd get really excited about this sell opportunity. Why? Because they've been selling for 3 weeks straight and the market has just continued up. So you know, there's a good chance that you'll get a pullback from there imminently if that were to be the case. But since it's already pulled back, I'm not as confident, we'll say, as a continued pullback, but it could. We could totally see this continue lower. But this is one that you guys know I haven't talked about as much, even though it's the biggest shift on the scanner. The opportunity, I think, was like a week ago. I think that was the big time to sell this. So, okay, let's continue on here. Another one is the pound dollar and pound kiwi and pound yen. Let's look at those. Okay, so pound dollar and pound kiwi. Those also have some pretty negative shifts for reference. Pound dollar. Okay, let's do this. Let's find 3 weeks ago and let's same thing. Okay, so this was 1 week, 2 weeks, 3 weeks. So this is very similar to the pound Aussie. How are the banks feeling right now? Probably not too bad. Like they're probably doing okay because when they started to sell, the market actually fell off and then it continued to fall off. So if they're down on a couple of trades from down here if they sold down here. But they've probably mostly flushed this market and they're probably doing okay. It could still continue lower, but I think they're doing fine. So this is not one that I would look at and be like, yeah, that's a huge opportunity. I probably wouldn't say so. So I just gotta continue on. I'll skip a lot of the pound pairs right now because we've already looked at a lot of those and I already know what a lot of them say. Except the pound CAD. Let's definitely look at the pound CAD. This is a trade we have a price action trade on right now. If you look at the pound CAD, um, over the last several weeks, this is where 3 weeks ago, this is where the market is, this is where it is now. It's actually gone up a little bit, even though the banks have been selling. There was a pretty big move to the downside, so I wonder if the banks made a lot of money on that sell. They're probably sitting okay after that sell. But what I saw and we saw together yesterday is we saw that there's a massive supply zone just above this resistance where most people probably have their stop losses. And so the fact that the banks are selling and then this is an obvious resistance area with a very clear supply zone just above it, we were thinking, yeah, if we could get this market to go up, hit that supply zone and then sell, that could be a really, really good trade. So this one we actually are trying to tango with it. We're trying to use the scanner to our advantage. I just don't want to sell right now. I don't think this is a good price to sell at right here. I think this is a much better price right there. So that's what we're waiting for on this one. Let me continue. Let's try to find something more obvious because I don't want this to be too confusing to you guys. Um, I want something like obvious, like the US 30. That was an obvious one. Clearly the market's down over the last several weeks, and clearly the banks have been buying, right? That's a good opportunity because the banks are going to have to try to figure out a way soon to recover that position, right? Okay, so let's see. What else can we find? Let's look at, okay, here's the franc yen, pretty negative shift right here. Let's look at that one because we looked at a lot of pound pairs. Let's look at this franc yen. And I have no clue. I haven't even looked at this recently. So let's see where we're at. Okay, so 3 weeks ago, oh, this would have been nice. Dang it. Oh, I'm kicking myself here. Oh, that's frustrating. It still might be offered. Yeah, we still might be able to make some money on this, but yeah. So look at this. So 3 weeks ago, it was 2 weeks, 3 weeks. This is where they started to sell. Oh gosh, this is crazy what they do. So 1 week, 2 weeks, 3 weeks. This is where the market got all the way up to there on the weekend. Got all the way up to there. This is perfect because on the weekend when we got the data, clearly this has gone against the banks. But when you look at the scanner, they're sellers, right? They've been selling. 5 week shift is also a sell, but you can definitely see the last 3 weeks, but a lot more aggressive. Okay, so a lot more aggressive, and it is a strong sell right here. You can see it says strong sell, and it's an 18.75, which is decent enough to be classified as a strong sell signal. And so that's clear. That's like clear cut. This is exactly what you want to see when you're trying to find these. And I'm kind of mad that we didn't take this trade. That's my bad for not getting us in, but you guys are certainly welcome to find these on your own too. Like that's why I'm teaching this is so that you don't have to be totally reliant on me to send you the signal. But I mean, obviously you can take the trades. I'll try to get these out to you, but you're more than welcome to take them as well. But this is perfect because this market was going up for 3 weeks, and yet the banks were selling pretty aggressively for the last 3 weeks. So what does that mean? Well, that means sooner or later, pretty soon, probably there's going to be a move to the downside because they got to recover their positions. Isn't it interesting also, guys? Look how far this dipped today. It literally dipped about where they started. Oh my gosh, it's so funny now, like in hindsight to see them in action. Like it's funny to actually watch these guys do what they do. They basically, yeah, coincidence? Yeah, exactly. Isn't it crazy? They literally went this dipped that during FOMC to where they started selling 3 weeks ago. Yeah, it's crazy. It's just crazy. It's totally crazy. It should be illegal actually, but it's crazy. I'm just trying to figure out a way for us normies out here to figure out a way to make money off of this because it's pretty cool. Um, but um, but yeah, so they covered 3 weeks of price action in 3 days, just like that. So that's another thing I want you guys to know about the COT report. This is a really key component right here. A lot of people give up on it because they don't know this detail. So the market took 3 weeks to build this position. Like the banks, this was going against the banks. They were building their short position this entire time. Okay. And then it took 3 days basically for them to sweep everybody out. They made all their money. They trashed all the traders during the news event. And then I bet they liquidated most of their positions on this move. That's why this has come up sharply again, is because all the shorts they had, I'm sure they liquidated on this move. They probably gave all those shorts away to all the retail traders. They're just like, here you go, you can take it, you can take it, here you go. You know, because that's what happens if you think about it. If you're the bank and you have the shorts because you've been accumulating them for 3 weeks, how do you get out of a short position if you're a bank? Well, you need a willing buyer. So you need a buyer in order to relinquish and get rid of your short. Okay. So who's your buyer? Well, anybody. It could be other banks. But most likely it's going to be retail and other brokers and things like that who are willing to take that from you, who need liquidity. So they pass it along to other people. And it looks like they did it quickly because you can see how fast this happened. Because as they when you sell something, when you hand it off to somebody else, you're a subsequent buyer. So when you close a short, you're now buying technically. It's equivalent to you created out of existence, or you created into existence a buy. Okay, because you're saying no more sell, let's give you buy, and that's what happened is lower a lot of willing buyers down at these levels down here. So, um, so yeah. Anyway, so it's just I hope you guys can see that. Like this is a great example right here. We might even end on this one because this is exactly what you want to find with the COT report is and this stuff can kind of take several weeks to develop, but if you're there and ready, like if you know it and you're like, "Ooh, I'm ready to go. I see what's happening. I see this has gone against the banks here." And they haven't had their move yet, like get ready because they're coming. They're coming back for their money. They will come back for their money. They're really good at it. And if you can see it in advance, it's just a beautiful thing. So the next one, um, so and I want to actually I want to leave you guys off on a few things to look for. So this one is already one that's already kind of happened. So the one that hasn't happened yet is the US 30. I think that's the most obvious one that hasn't really taken place yet. A lot of these have actually happened over time. Like these, it just took place, you know. I would say pound cat is obviously one we're keeping an eye on. We're not quite ready for the sell. I don't know if this is a great place to sell, but if it does go up, I would like to be a seller at that price that we indicated on the pound CAD. So that is one that I think could be pretty good. We're just going to be patient with it. And then the other one that I think you guys should really pay attention to is, oh, actually, let's take a look at oil real quick. I just want to see this. Let's see what oil's doing. Oh, wow. Okay, so that's crazy. So the banks were selling, you can see right here on the 3 week shift, minus 17% on oil. Look what oil's done last 3 weeks. Boom. So this is one, I mean, just I look at it and I admire. Okay, yep, banks are selling. It's gone down. That's exactly what you would expect. Okay. Do I continue to sell? Not really. That's not, I've gotten burned a lot. I've burned myself many times with trades when I try to do that. So I'm not going to try to tango with this one because I think the underlying opportunity has already happened. I mean, it could continue lower. I'd love to see oil just continue lower. But who knows? Like, if the banks have already, maybe they're content with the profits they've made. And here's the problem, if they start to take profits, then who are they giving the profits to? Like, well, because they have to give it to somebody else, right? And so if you start to sell and they're now buying because they're closing their position, you're going to get caught in the whirlwind of that and you're going to lose money, right? So I don't really like this kind of thing as an opportunity because the opportunity's already come and gone. But when you look at, like I said, US 30, this is one that where's this been over the last 3 weeks? Okay, so if you look again, just real quick, we'll wrap up on this. You see, okay, where did it go? Where's US 30? Am I just skipping it? My eyes are being weird. Sorry. There, okay, there it is. No, there it is, right there. So it's over the last 3 weeks, 25.05% positive shift. Okay, perfect. Where has this been over the last 3 weeks? Here's 1 week, 2 weeks, 3 weeks. This is where it started. This is where it is. It's down right now. So that's perfect. That's what you want to see. You want to see the market down against the banks because they got to come back for their money, right? Okay, so anyway, that's what I'm waiting for. I don't know if it's going to happen tonight or the next couple of days, but that is the game plan. That's what we've been preparing for the last week or so. This might be a good, now that FOMC's over, maybe this is the cue for the banks to finally load up and get this to go higher. It might just be exactly what we needed. So we'll see. But that's what I want you guys to look for. So this next weekend, because we're kind of getting to the end here, this weekend, what's the homework? When the scanner updates on Saturday or Sunday, I want you guys to spend maybe like 30 minutes. Okay. I do this. So I think it'd be good for you guys to do this as well. Go onto the scanner, look at the biggest shifts on the 3 week. I would just do the 3 week. You don't need to do the 5. You can do the 5 if you want. Just, I would think the 3 weeks fine. Compare each chart. So look at the scanner and be like, okay, these currency pairs had really big positive shifts. These ones had really big negative shifts. Okay, now go look at the chart. What has the market done in the last 3 weeks relative to the scanner and the data itself? And if you find something, you can either you can send it to me, or you don't have to. It just might be a good exercise. Send me a message on Telegram or a text message or email. He's fine. You can also message me technically just on the website. There's a little chat box function on the website. You can send stuff there and I can respond back on the chat box on the site. That's another way to talk to me. But you can take a picture, send it to me if you wanted to do that, or just journal it yourself. That way you can kind of have an idea. Okay, these are currency pairs I'm looking for. I'm specifically waiting for big moves to happen on these pairs this week because clearly, as an example with US 30, market has gone down, but the banks have been buying. That's what you want to find. That's where you're going to find the most success with the COT report. So like I said, I've been using the COT report for many, many years, and there's a lot of good ways to use it, but I think this is one of the best ones because you're literally following what the banks are doing in context of their timing and everything, their time frame, and you're catching them off guard and or in the middle of their, you know, the manipulation that they do in the market. You're catching them in the middle of that, and so you're able to follow them pretty closely while they're doing it. So okay, let's see. Let me look at some of these comments. Let's see. It's fascinating to know what is about to happen before it happens. Exactly. Yeah, and like I said, that's not, you can't get that from an RSI. You can't get that from an SMA or a MACD oscillator type of indicator. Uh, this is data driven. This is what banks are doing in real time, what their goals are, and you're trying to follow what that general, what their general goals are in that trade. Absolutely. It says Mr. Rover would love to see it go lower too. Yeah, totally. That's awesome. That's awesome. Then Muhammad says that would be a great exercise for us to get more used to utilizing the scanner, not being dependent on you to find every opportunity. No, I think that's great. I love it when you guys take my signals. That's why I provide them. I'm gonna keep sending signals out. Um, I'm always gonna keep doing that. But yeah, definitely there's plenty of ways you guys can find your own opportunities as well. That maybe you're more comfortable with getting into. Um, but no matter where you are, like if you just want to take signals, that's why I'm here. I can help you take signals. If you want to, go further and find your own opportunities, absolutely. That's a great thing to do. All right, guys. Well, I think this was a really good webinar. We did go a little bit over than what I thought we were going to go, but I felt like the conversation was good. I felt like we got a lot out of this. Hopefully, this was helpful. This is recorded, so if you want to come back and refer to this, it'll be up in about 30 minutes. The other webinar we just did, it's already up. So if you want to go back and watch that, it's ready to go. All right, guys. Well, have a fantastic rest of your evening. Thank you for coming, and we'll see you guys in the next webinar.